Hello, everyone. Good morning from this part of the world, and depending on whichever zone or time zone you're tuning in from, good afternoon and good evening to you. I'm well. Pardon me for the late entry this morning, as I have a couple of issues that I needed to sort out. First of all, I'm having flu. So I'm having a running nose, and this might affect my voice. Please pardon me while I do so. And if my voice is not clear enough, please let me know in the comment section so that I can do the necessary technical adjustments to make us have a better experience. And of course, I'm also having some issues with my audio right now, and I hope to manage it the way it is at the moment so that I do not delay the live session, as we are already preparing for the last trading day activity for the week. So I'm so excited to be with you here this morning. Good morning once again, and I hope we all had a great weekend. The week has been very fantastic for me, actually, across all the assets on our watch list. Remember, we have been monitoring 3 financial instruments through the course of the week. This includes the USOILSPOT. We also have the GBPUSD as well. And finally, my favorite asset amongst them, which is the XAUUSD, popularly known as the gold spot. And today we are going to be delving into the chart, looking at things from both technical and fundamental perspective, with the utmost intent of identifying trading opportunity as we prepare for both the London and the New York session. And it's also important for us to take into account the nature of today's trading activity, being the last trading day of the week. And is it of the month too as well? Okay, Monday is the last trading day of the month. So today is the last trading day of the week, and there is this potential for market participants to start rounding off their trading activity ahead of the weekend. And as a result of this, we are likely going to be seeing some sort of reversal setup, maybe, where price action begins to show signs that it wants to move in the opposite direction of the prior leading price action. So we are also going to be taking all of this into account while we review the current market structure today. And while we do this, we are also going to be looking at the major drivers in the market, both from the positive and negative perspective, so that we can gauge the potentials that buyers and sellers have, identify entry zones, TP target area and potential stop loss areas, and of course how we will be managing our existing positions. And if this resonates with you, I encourage you to stay tuned in, as you do not want to miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you're highly welcome on board. Very glad to have you around with us this morning. And I know you'll be wondering what this is all about. So this is the Forex Morning Mastery, an educational platform where we come together 3 times in a week. That is Mondays, Wednesdays, and Fridays, coming together as a community to do follow-up details on the weekend videos I share, which usually details the assets I usually monitor week in, week out. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in improving your own independent trading strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. Also, don't forget to always give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. We want to make the likes tally with the number of people that are coming on board today. And one thing I will also let you understand is that your likes goes a long way in supporting this community and channel, as the more likes we have in correlation with the number of people on board gives this video a chance for the YouTube algorithm to push it to a wider audience of traders who may find this content beneficial to them too. And so it goes a long way in also inspiring me to continue to do more on this platform. So I welcome you all once again. And with that said, we shall be diving right into the business. I see you, Esther Idimachi. Good morning to you, Esther. Trust you're doing very well and glad to have you around with us this morning. So with that being said here, we will be diving right into the business as always. And of course, the first thing we normally do every morning when we go into the market is to try to understand the fundamental factors that will be influencing the sentiment in the market today. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to effectively position ourselves for the next move prior, during, or even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing actually on high impactful event from both the United States and the United Kingdom economic docket. But before we go into today's economic events, I would like us to have a quick brief into what really had happened during the course of the week that had influenced how market participants behaved. Now, the first event that came in, so we are going to be looking at high impactful event because these are very important events that gives the market some fresh impetus on what to do next. So the first impactful event came in on Monday, both from the United States and the United Kingdom, and that is the S&P Global Publication on Services and Manufacturing PMI. Now, like I did say on Monday, this data here offers key insights into the health and performance of the service and manufacturing sectors of both economies. And it has an index of 0 to 100, where anything below 50 is considered as a contraction, which is not a good development for the currency assets of that economy. And anything above 50 is considered to be a positive development, showing expansion in that sector, which obviously will dovetail to positive traction in favor of the currency assets of that particular economy. Now, looking at the data we had from both the United States and the United Kingdom, things were not looking rosy from the United Kingdom, as we saw all the data came in below what market had expected, though they were all above that 50 mark, but it wasn't as what market had actually expected in that regard, and that led to some negative traction against the GBP, especially during the course of the week before it finally gained momentum during the later part of the week. Then from the US economic docket, the S&P came in with mixed reaction, as we had 47, lower than 50, lower than the previous month data, and even lower than the market expectation. And we have the services PMI coming in higher than market had expected. In fact, the services PMI has been doing very well in the last couple of months. Then we went on to see the gross domestic product annualized for Q2 come in on Thursday. And for those of you who are not familiar with what the GDP is, you see this is an economic data, though expressed in annual growth rate, measures the total value of goods and services produced by any particular economy we are talking about. And in this case scenario, we are talking about the US economy. And it's considered to be a key economic indicator of how well or how healthy that economy is doing. And from the look of things, the previous quarter came in at a 3% expansion, and market participants and economists had projected that it will also come in at a 3% expansion, and that was exactly what the actual data came in at. We had a 3% expansion, showing that the US economy is still resilient. And of course, we saw some other mid-tier economic features during the course of the week, like the US jobless claim count, which also came in very well, showing us that the labor sector is doing very well. And then we also had some Fed official speeches during the course of the week, where they tried to rally some momentum for the US dollar. Then today, Friday, September 27th, we are going to be looking at the core PCE, that is the core personal consumption expenditure price index. Well, this measures inflation by tracking prices of goods and services, and it excludes volatile food and energy cost. Now, a higher PCE reading indicates stronger inflation, which can lead to a stronger US dollar as investors seek higher returns in the US economy. Now, the anticipation of this event has influenced the sentiment in the market greatly in the last 24 to 36 hours. If you have been monitoring the charts since yesterday, you would have noticed that the market has been a little bit choppy, going through a consolidation phase where buyers and sellers have been going through a tug of war between a range bound in the last 24 to 36 hours. And I'm of the opinion that this is as a result of this important event, which is considered to be an inflationary gauge of the United States. So I think major key players may have stepped aside from the market, waiting for this data to come in before making any aggressive bets on any of the assets they are willing to buy ahead of the weekend. Now, if we look at the data for the US core PCE, for the previous month, it came in. So this is a monthly report, actually. So the previous month came in at 0.2% expansion, while economists are projecting that we are likely going to see another 0.2% expansion from last month. And for the year on year, we are looking at 2.7% expansion as against the previous month, which came in at 2.6%. So what is the actual data going to be? Well, this is something everyone in the market will be looking forward to. And I can bet it that as soon as this data comes in, we are likely going to be seeing some high level of volatility across the asset we are monitoring. And we do want to be on standby to capitalize on this opportunity. So the time of this event is 12:30 p.m. UTC, that is 1:30 p.m. West African time. So I encourage us all to mark out this timing on our calendar, as we do want to be around to partake in the potential momentum that is likely going to come as a result of this event. And I usually say this, that major key players in the market do have insiders in this department that are about to release this data, and as a result of this inside information, they have a first-hand knowledge of what is likely going to come out, and as a result of this, they usually position themselves ahead of this event, building on a position. If it's buying or selling, they do this on a regular basis, and as retail traders, we want to follow their footsteps. They have trails that they leave behind, which usually reflect on the chart as technical structures, price actions we can actually use to strategically position ourselves for the next move. So this is exactly what we are going to be doing today. So stay with me, grab your favorite beverages, and don't try to miss out on any of these ideas we will be talking about today. So click that like button, guys, and let's get the ball rolling. So with that said, let's dive right into the first asset we are going to be looking at for today. So my US oil is taking some time, so let's hold on a bit. All right, so the first asset we are looking at today is the USOILSPOT, the US crude oil. You can also call it the WTI, depending on which broker you are using. And in fact, we've had some interesting situation through the course of the week. At the beginning of the week, we were actually buying the USOILSPOT. We were lucky enough to capitalize off some huge momentum before that bearish momentum came in here on Wednesday, which obviously gave us over close to 300 pips in profit before we got taken out a couple of days ago. And during our live session on Wednesday, we were able to identify a range-bound structure on the 15 minutes time frame, which resulted in some messy situations. It was very choppy. Price triggered some of our stop orders, but unfortunately, they did not do well as market were indecisive on what next to do at that point. But for me, I still think that the current situation, or let me say the fundamental factors behind the scenes, still supports that the US crude oil could be on the verge of recovery anytime soon. Now, before we go into the technical details of what we are looking at for today, I would like us to reflect, look at the factors that reflect the tug of war between supply concerns from major producers and potential demand growth from China. Now, one of the positive factors here that may likely influence the sentiment around the USOILSPOT is China's fresh stimulus package. And I think I talked about this on Wednesday, that China had to pump in some funds into the economy so as to stimulate the economy, and measures to stimulate the economy could lift US oil prices. Remember, China is the world's largest crude oil importer, and if the economy is doing well, buyers see this as a good signal that could make China buy more oil from the global market, and as a result of this, we may see price climb to the upside. Then like I was saying, as regards to that, that's one of the major reasons why we could see some potential bullish concerns. And of course, supply concerns as regards to geopolitical tension as well could influence the sentiment around this market. Remember, we have the Middle East tension, the Israel, Hezbollah, Lebanon situation, which has been going on for a couple of weeks now, and the tension is growing every day. And as a result of this could incite supply concerns from this particular area. Remember, most of the oil supply of the world comes from the Middle East area, and this could trigger some fear that supply could be cut off at any point in time. And as a result of this, countries will want to build stockpiles on their reserve, increasing demand. And when demand increases, what happens? Price will definitely rise. And I also talked about the API report on Wednesday, which showed that there was a significant drawdown in crude oil stockpile in the United States, which is a very good signal that demand is higher than supply. Now, all of these factors behind the scenes influence the sentiment in favor of USOILSPOT at this point in time. So I personally believe that the path of least resistance is looking very bullish at this point. However, there are some other underlying factors which we also need to take into account, like the Saudi Arabia's commitment to increase oil production, even at the expense of lower oil prices, and this may put downward pressure on the US crude oil. Now, lately, the Saudi Arabia, when there is an increase in production, that means that supply will definitely increase, and when there is surplus of this commodity in the market, we may see price drop significantly due to the availability of this commodity. Then another factor is the expectation of increased oil production from Libya following agreements, following their political agreements. Remember, there has been some tussle in the political scenario in Libya of late, and this is further contributing to the decline of oil prices since the beginning of the week. And this factor could persist right into the weekend, as we never can tell what could happen during the weekend. And so as a result of this, we may see major key players closing in on their positions they took from Wednesday's trading session. So with all of these factors behind the scenes, let's go right into the chart and see how market participants are digesting this information and how they intend to position themselves ahead of the weekend. And another thing I would also like us to take into account is the macroeconomic data coming up today. We talked about this earlier. That is the US core PCE, which will be influencing the US dollar dynamics. And of course, the crude oil is a commodity, is a US dollar denominated commodity, and whatever happens to the US dollar will definitely rub off on the US crude oil. So if the dollar rises in value because of the expensive nature of the dollar, the US crude oil could drop. The demand for US crude oil could drop, and this could incite selling pressure. And if the data comes in not too good, then we may likely see the dollar drop. And if the dollar drops, then we see major buyers want to take advantage of a weaker US dollar to stock their reserve with crude oil, hereby increasing the demand in the market. So as a result of this, we could see some buy pressure coming in today. Now, for the sell position we took on Wednesday, all of them have been closed actually. And if you remember, on Wednesday we had a simple setup on the 15 minutes time frame, which we said we are going to be using to navigate the structure going forward. So right now I've scaled down into the 15 minutes time frame here, and of course we did identify that as soon as price action got into that zone between the $66.95 level and the $67.30 area, we saw how it became difficult for sellers to break through that particular area, and for us this became a robust support line. So we had a demand zone right here. As we see, all attempt by sellers to break through has always been met with strong resistance from the buyers, as you will see here. Now, with a range-bound structure in place where price has been confined within the $68.30 level and the $67.30 area, you know how we do it. We wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, like I did say earlier, this led into a couple of losses for us as we got both position triggered during the course of the week, making us relinquish some of the profit we made at the beginning of the week. But it's okay. Today is the last trading day of the week, and due to the potential volatility that could happen today, we may have the privilege of recouping the loss we incurred during the midweek. Now, going into today's session, how are we going to be navigating this current market dynamics? Well, personally, for the fact that price action is sitting above a demand zone, and coupled with the fundamental factors I said earlier supporting an ascent in oil prices, I still think that looking out for buying opportunities at this point is looking very reasonable. And for me, I will see this as a short-term trading opportunity, as this could be a retracement of that impulsive bearish leg that started this week. So remember, this bearish momentum started at the $72.20 area, and we could see a situation where price could retrace back into some structure, maybe before another downtrend move happens, or it could continue further to the upside. So as a result of this, I want to be, though I have a buy position triggered already somewhere right around the $67.50 level, running in profit at the moment. But if you missed out on that opportunity, let's wait and see if the market will come back into that demand zone again. If it does come back into the demand zone, we do want to capitalize on that bullish move all the way to the upside. So personally, I strongly hold on to a bullish bias for today's trading session, and if price goes ahead to break out of the $68.30 level, then we will be looking at adding more buy positions above this particular structure. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We usually take into account the potentials of both buyers and sellers together. And of course, we need to also look at what the sellers have in store with this current structure we are having. Remember, I talked about Saudi Arabia's commitment to increasing oil production, which for me is a sign that we could see increase in supply and sentiment could beginning to lean towards that direction, and we may see that happen as early as today's trading session. Then if that is going to be the case, selling the US oil spot for me I would like to see price action break down this support line, not just only break down the structure. Remember, it has broken it down a couple of times during the course of the week, but it wasn't successful enough. So what I will be looking out for in this case scenario is a significant breakdown happen. I will not be joining right away, as I will need price to come back, retest the structure where continued selling pressure below that area will give me that good signal to join another wave of bearish momentum. So that is how I will intend to capitalize on any potential selling opportunity around this area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us an update of what to do if price gives us that signal. But for me, I hold on to a bullish bias here and will only consider selling if something significant shows up on the chart telling me that sellers are getting stronger at this particular point in time. So this is my simple view on the US oil spot for today. We are definitely going to be using this range bound structure to navigate the current market dynamic. And for those of us who have a buy position at this juncture, I encourage us all to move all stop losses, secure your current buy position, as we may see some volatility come in anticipation of the US core PCE coming up in about 3 to 4 hours from now. So if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off while I take a sip, and looking forward to see if there are any questions, or if you need some further clarification, drop them in the comment section. You can also take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Stay tuned in, guys. Cheers. All right. So in the absence of no questions, I want to assume that we are all on the same page and all of the structures are duly marked out on your chart. Please do. They're very, very important, as it makes our job a little more easier to navigate this market dynamic as market participants round off their trading activities today. So with that said, we shall be moving right into the next asset on our watch list for today. Stay tuned in. So the next asset we are looking at this morning is the GBP USD, the British pounds against the US dollar. And it has been a roller coaster ride on the British pound against the US dollar since the beginning of the week. We've had situations where we bought, I think most of the time in the week, we bought the GBP USD. And at a point in time, we had a sell, which was triggered, but that did not do very well before we finally had another buy happen yesterday before we were taken out with a modest size of profit. Before we go into the details, I would like us to take a pause and rewind back into how it all started for us this week and what led to the situation that made us started buying the GBP USD. And this is for the sake of those who are joining us for the first time, so you can have a privilege of being on the same page with us. And I will only be focusing on the execution time frame. So if you had missed out on my top-down analysis on Monday, I encourage you to look for my video on Monday to have a deep background into how we got to this point. So at the beginning of the week, the most important structure, which was a yardstick guiding our trading decision, was our key level, which was duly situated at that psychological area around the 1.3700 area. And you know how we treat our key levels. Whenever price remains above them, we want to be looking out for patterns and structures that support the idea of buying that asset, and we will not consider selling unless this key level is broken to the downside. And this could, except rare cases where we see some significant confirmations, then we can join a sell above that key level. Now, besides the key level here, at the beginning of the week, we had a range bound structure initially, which lasted about 10 to 12 hours as price was confined within the 1.33235 level and the 1.33050 area to emphasize the prevailing uncertainty in the market at that point in time. And you know how we treat our range bound structure. Whenever we identify them, we wait for price to either break out of the resistance line, giving us an opportunity to buy. I had a buy stop order above that structure, which did not happen, and we had a breakdown of structure welcoming selling idea. Though we missed out on this breakdown of structure, but we did say that if price comes back, retest the structure, we will be looking out for selling opportunity. However, during our live session on Monday, price action was trading and oscillating around that key level at the 1.327, and I did say here that if we notice a reversal pattern or buying pressure around this area, it will be a good opportunity for us to join an uptrend move. And lo and behold, we had the privilege of joining that move. And remember, we had multiple levels that we were using to maximize the potential of the bullish move. We had the 1.33050, we had the 1.33235, we had the 1.3 this one right here, I think 1.33590. And we were taken out of all of these buy positions during the Asian session on Tuesday. And during our live session on Tuesday, I guess. Was it on Tuesday? Yes, on Tuesday, I shared an update. I gave us a new structure which we will be using to navigate Tuesday's trading session, and that was this range bound structure between the 1.3359 and the 1.3340 area. And for the fact that price action was sitting above that ascending trend, let me show you the ascending trend line so we can hope be on the same page. And for the fact that price was sitting above this ascending trend line, we were looking out for the breakout of that range bound structure to the upside to continue that uptrend move. And lo and behold, we were able to join that. As you see here, price broke out of the 1.33590 area, and we run that move to the upside. We added more at the breakout of the 1.33800 area before price tested the weak eye at the 1.34275 before this move drop to the downside. And on Wednesday, I can remember telling us that we will, if price breaks down, as price has broken down the structure, a retest of structure will welcome selling ideas, which actually triggered a sell position for us, but it failed to gain momentum as we were taking out of that position. And on Thursday, I updated us earlier on Thursday that a breakout retest of this descending trend line would be all we need to confirm that that bearish move may no longer be valid anymore, hereby welcoming buying ideas. And this was exactly what happened. We saw the breakout retest and we saw this move all the way to the upside yesterday, giving us a minimum of 2 buy positions, where the first one run with about 70 pips, the second one went to as far as about 50 pips before the bearish momentum came in. And of course, if you had moved your stop losses accordingly, you must have gained some modest size of profit on that particular one. And for those of you who took advantage of this opportunity, who stayed faithful to our analytical approach, well done and kudos to you. Now, as we move on into today's trading session, we need to understand the factors that interplay between global monetary policy expectations and risk sentiment driving the fluctuation in the GBPUSD market before we go into the technical details. Now, talking about the fundamental drivers behind the scenes, we will weigh in on the positive one and of course look at the negative ones as well, which will be influencing the tussle between buyers and sellers today. Now, topping on the list here is a rising bet for a more aggressive rate cut by the Federal Reserve in the month of November, which obviously has been limiting the upside trajectory of the US dollar, and this has gone as far as supporting the British pounds and other assets against the US dollar. And in this case scenario, the GBPUSD is not left out on this case. As you will see, since the beginning of the week, the market has continued to find higher highs and higher lows, supporting a bullish outlook for the GBPUSD. Then the optimism that global economic activity will improve due to anticipated interest rate cuts keeps risk sentiment elevated in the short term, and as a result of this, the pound sterling could take advantage of this one. Then earlier I talked about the China stimulus, which including the 7-day repo rate cut and reducing the reserve requirement ratio, fuels risk appetite and support riskier assets like the British pounds at this point. So all of this for me continue to support a bullish outlook in favor of the GBPUSD. Now, another factor we cannot ignore is the expectation that the Bank of England will cut rates more gradually than the Fed, and this is continuing to help underpin the British pounds and limit any potential losses on this asset. It is well known that the Federal Reserve are going to be aggressively adopting a easing monetary policy for the later part of the year due to the thinning out of inflation in that economy. And unlike the United Kingdom economy, inflation is still rearing its head. Hence, the Bank of England are not yet sure whether or not they will be cutting interest rate next month. And this was further emphasized by the Bank of England Governor Andrew Bailey during one of his speech. I think at the beginning of this week or last week he did mention this fact. So for me, since the Bank of England are not willing to cut interest rate right now and the Feds are clamoring for more interest rate cuts, the British pound at this point looks more promising for investors to put their money in due to the return on investment they stand to gain compared to the US dollar at this point, which further supports price going to the upside. However, in as much as all the path of least resistance for the British pound looks bullish at this point in time, we cannot ignore the recent uptick in the US dollar, which was driven by repositioning ahead of the US inflation data, which is coming up later today. And as a result of this, we may likely see subdued trading activities as key players wait to see what the data is going to be like before making any aggressive bet at this point in time. So it's very important to take this into account. So like I did say earlier, we are looking at in 3 to 4 hours from now, the core PCE data will be coming out, which will be playing a significant role in this market. And for me, it always plays out good if you're already in the market before this kind of event happens. And if I'm going to be in the market before this event happens, I want to be on the bullish side of the trend. Then in the last couple of days, we've seen a better than expected US macroeconomic data. We saw what happened on Thursday. Despite dovish Fed expectation, the US economic data on Thursday provides some support to the US dollar, like the labor sector, which has showed some resilience following the release of the US jobless claim count that came in yesterday, which was very promising, and that led to some bearish traction at this point in time. So with all of these factors behind the scenes, I still strongly believe that the path of resistance remains to the upside. Now, in order to help us navigate the structure today, I have a temporary trend line which I will be using after projecting the one that was supporting this bullish momentum since the beginning of the week. Remember, price did break down this trend line on Wednesday. Remember, this was the initial trend line we were using at the beginning of the week to navigate the structure, and we saw a breakdown happen and price found buy pressure here. Then we saw a breakout happen here. Price dropped below the trend line again, and look at what is happening here. It appears price is finding buy pressure on that area as sellers are finding it difficult to break through that particular area. And for me, this is a buy zone, an area which shares a confluence with the ascending trend line. So placing a buy stop order anywhere around here is looking promising at this point in time, and I already did that this morning. But if you're yet to do that and price continues to climb, placing a buy stop order above the 1.33800 area is looking promising to join a bearish move, a level which interestingly is close to this descending trend line we have here, where the breakout of this descending trend line will be another confirmation that price is going to be moving to the upside for me. So stop losses on this one should be below the previous low, which will be between 20 to 25 pips, depending on where your entry point is. So I maintain a bullish bias at this point in time. And if price continues to climb, we're looking to add more buy position at the breakout of the highest point price action has gotten to for this week at the 1.34275. So this is how we are going to be navigating the bullish perspective on the GBPUSD today. Now, in as much as we're looking out for buying opportunities, I talked about the expectation of the US core PCE, which could change the market dynamic outrightly, maybe favoring the US dollar and pushing price to the downside. And if that is going to be the case, where and how are we going to be joining a bearish move at this point? Now, to join a bearish momentum here is very dicey considering the technical details we have on the chart right now. Now, if you look at the structure, remember the 1.3359 was an area where we had selling pressure yesterday. We sold around this area yesterday. Sorry, was it yesterday or on? Yes, yesterday we sold around this area, but unfortunately we were stopped out in a loss on that one. And for me, anywhere below the structure is still looking bearish for me. I consider this area to be a selling niche at this point. And why have I said so? Well, if we go to as far back as Wednesday's New York session, we saw how price broke down both this level and that ascending trend line that was supporting the bullish idea in the last couple of weeks. And of course, we were looking at a retest here which failed to happen, taking us out of that position. Now, if price will drop below the structure again, I may see it as another opportunity for sellers to gain some momentum to push price to the downside. Now, the reason why I said selling at this juncture is dicey is because of this descending trend line that we have here. Now, because of this descending trend line, if we sell below the 1.33590 area, as soon as price action moves close to that trend line, let's ensure we move all our stop losses and secure the sell position. Because why? Buyers could come in again from this particular area to incite an uptrend scenario. Now, if we go to the beginning of this week, you would agree with me that this was the same area where the consolidation phase we noticed at the beginning of the week happened, and it's an area that's had a platform for buying power at the beginning of the week. As you will see here, look at what happened around this area, and then the same thing could happen around this area. So if we are going to be selling below the 1.33590 area, as soon as price gets close to the structure, that's about 35 pips thereabout, we move all stop losses, secure the position while we wait patiently to see how the market is going to react to that area. If it so happens that buy pressure resumes again, then this could welcome another wave of bullish momentum from that area. But if price drops below the structure, retest it, then that could incite more selling opportunities at this point. So it's a simple scenario here, nothing complicated, but I doubt price will come back into that area. But if it does, we want to be on standby to capitalize on that move. And like I said earlier, I still maintain a strong bullish scenario, except for the fact that if price break down the 1.33590, then I can start considering selling the GBP USD, and that is subject to what happens during the US core PCE data coming up in about 3 to 4 hours from now. So we have another buy position triggered on the GBP USD here, and remember what I said, stop losses should be anywhere below the 1.33590, around 20 to 25 pips of stop loss will do just fine, and let's see how far that momentum will go. So this is my simple view on the GBP USD for today. It's a simple setup we have here. Our center of focus ahead of today's session is between this 1.3359 and the 1.33800 area, where depending on the direction of the breakout will determine if we are buying or selling the GBP USD today. So let's mark this out on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. I will be taking the next 10-15 seconds off. As always, let's see if there are any questions. And if you are yet to click on that like button, please do right away. Support this channel, support this community, and continue to inspire me to do more. And for those of you who would like the video, thank you very much as you do so. I'm very grateful. So see you all in about 5 to 10 seconds from now. Cheers. All right, everyone. So, in the absence of no questions, I take this as a confirmation that we are all on the same page, and all I've said so far has been quite explanatory. So, moving on into the final asset on our watch list. All right, so the final asset we are looking at today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And so far this week, the gold commodity has been the most profitable asset on our watch list, as we have been buying and buying the gold throughout the course of this week. And before we go right into the details of what our expectations are today, let's take a pause and rewind back to the beginning of the week, and let's see what really happened and what led to the decisions we made. This is for the sake of those who are joining us for the first time and those who wish to have an overview into the ideology behind the decision making we had on this asset. Now, at the beginning of the week, remember, we had our key level at the 2,590. For those of you who don't know how we identify our key level, we usually do this on the higher time frame. I already have a top-down analysis video on this asset, which I shared during last weekend. If you missed out on that video, please check it out so that you can have an overview into how we got to this point. So moving on right now, price was sitting above our key level at the beginning of last week, at the beginning of this week, and this level here has been a strong selling niche in the past. As you will see, it was a previous record high, and we saw how buyers were finding it difficult to break through that area, and this continued into the later part of last week before we finally saw price break out of the structure on the final trading day of last week. So prior to the beginning of this week, price action was somewhere around this area, and we had two scenarios that we were looking out for: a potential uptrend continuation pattern or a reversal setup that could push price to retrace back into the structure that was broken. So to give a visual representation of what I mean, we were looking out for a possibility of price coming back to retest the 2,590 before the uptrend continuation happens, or a evolution of price action into an uptrend continuation pattern that will give us that opportunity to join that uptrend move. And this was what happened at the beginning of the week. We were able to identify an uptrend continuation pattern, and depending on from which perspective you're looking at it from, you may call it a pennant or you may call it a flag pattern, but most importantly, this is what we saw. So after this impulsive move, we saw the price go through a consolidation phase into the first couple of hours of this new week, giving us an uptrend continuation pattern to work with. And prior to our Forex Morning Mastery session on Monday, we already witnessed price broke out of this structure to give us and validate that we have an uptrend continuation pattern on the table. And with this kind of scenario, we were expecting the possibility that price could come back, retest the structure to continue that uptrend move, and that was exactly what happened. And remember what we did here on Monday: we positioned ourselves somewhere around the $2,616.25 level to join that uptrend scenario. And since that moment, we have been buying the XAUUSD. And remember, we had multiple levels. We had the 2,626 level right here, which we added more buy positions. We added another one at the breakout of the $2,631.50 level. We also added another one at the $2,638.25 level as price action went ahead to hit an all-time record high again for the second consecutive week at the $2,686 level. And for those of us who are part of this profitable journey, well done and kudos to you. And during the course of the week, we had multiple structures on the 50 minutes time frame, which I did updated us on a regular basis on both my TradingView and Telegram platform. If you missed out on it, you might want to check my Telegram channel or TradingView platform. The links are right in the description box of this current video you're watching, and see how we were able to navigate this current structure. And for those of you who are part of the Go challenge, we also scalped this market using the same 50 minutes time frame strategy we identified during the Forex Morning Mastery. So once again, well done and kudos to everyone who stayed faithful with our analytical approach. Now, as we move on into today's session, we have an interesting situation unfolding on the chart as the market has been a little bit choppy in the last 12 to 24 hours as market participants anticipate the US core PCE data coming up in about 3 hours from now. Now, before we go into the technical details, let's take a quick insight into the fundamental factors that have been driving the market sentiment behind the scenes. Well, these factors will highlight to us the key forces driving gold prices at the moment, with ongoing tensions and central bank policies at the forefront. Now, the first one which I would like to emphasize here is what I've been saying since morning, which is the China stimulus measures that they took during the course of the week, as China's new stimulus initiative continue to bolster market sentiment, hereby reducing demand for safe haven assets such as gold. Now, when big global economies are doing well like this, we used to see an outflow of capital from safe haven assets into ETFs or instruments that are in relation with anything Chinese at this point in time. Then we also have the Fed easing expectations. We talked about the market participant pricing a possible 50% chance of a 50 basis rate cut by the Federal Reserve in November. And this has been keeping the US dollar under pressure since the beginning of the week, hereby limiting any gold downside. Then another factor that will continue to influence safe haven assets such as gold is the escalating tensions in the Middle East, contributing to the lifting, to continue to lift the safe haven appeal for gold, copper, silvers, and the like, and helping it to reach more record highs at this point in time. Then we also have, which other one again? I think that's all as regards to supporting factors for gold. However, in as much as we look at the supporting factors for gold, we need to also take into account the negative drivers as well, which could favor the US dollar. So we're talking about the US dollar in recent time. I've been seeing some buy pressure emerge as a key factor driving gold prices to the downside in the last 24 to 36 hours. And one of which is the US economic data. We talked about the US GDP, which came in, showed an expansion of 3% for the US economy in Q2, which also has strengthened the US dollar in recent time. And then we also saw that the US labor sector is also doing very well from the US jobless claim count we saw came in yesterday. The initial claims for state unemployment benefit fell to about 218,000. I'm not sure if I'm right about that figure, indicating a strong labor market and providing some support for the US dollar at this point in time. So within this contrasting view and development, how is the market going to be navigating the structure today? Well, I think it's going to lie on the outcome of the US core PCE today. Will that data complement the positive figures we've been seeing from the US economy through the course of the week, or is it going to derail it, hereby giving the gold commodity more platform to drive and find new highs? Now let's go into the chart and let's look at things from a technical standpoint. Remember, our price action gives us an insight into how market participants are behaving at this point in time. Now with this situation here, I have a new trading setup that we are going to be using to navigate the current market dynamics today. And this I have found on a lower time frame, that is the 50 minutes time frame, and in fact it's going to be helping us to scalp this market. This is for those of you who are part of the Go challenge. We are going to be using it to scalp the market today. Now let's look at what I was able to come up with from this structure. Now what I did here on the 15 minutes time frame was to take into account the character of price action in the last 24 to 29 hours or so. And one thing I was able to come up with is the fact that price has been bullish, and after connecting the series of higher lows, we have an ascending trend line to work with going into the last trading day of the week. Now, you know how we treat our ascending trend lines. Of course, as long as price remains above them, we want to continue to look out for patterns and structures that support the idea of buying, and we will not be selling unless price breaches this trend line, break it, retest it, then we see selling pressure on our lower time frame before jumping into a sell position. Now, besides this ascending trend line you see here, we also have another structure which will be playing a significant role today, and this is this robust demand zone. Now, if you look at this structure and we go to as far back as Wednesday's trading session, you will see that the area between the $2,663 level and the $2,665 area had continued to be a barrier for sellers in the last 48 hours. And the inability of sellers to break through the structure for me is a red flag that sellers are not strong within this particular area, giving us an idea that the gold commodity still has a potential of continuing its uptrend today. Now, for the fact that price is sitting above this temporary demand zone at this point, the path of least resistance technically still remains to the upside. Now, besides this, I also have a descending trend line connected after price tested at a record high here, which for me, a further breakout of this structure will be a very good signal for me to look out for more buying opportunities around this area. So at this point in time, considering the fact that price is sitting above this demand zone, buying anywhere around this area is looking promising. Now, if you are a long-term trader like me, like a swing trader, like a positional trader like me, you want to be having a wide range of stop loss here. We are looking at between 60 to 90 or 100 pips thereabout to capture the potential volatility that could come up today as a result of the US core PCE around this particular area. And to be candid, anywhere above the structure is looking promising to buy. Look at what has been happening here in the past. We can see buy pressure here. We saw buy pressure here again yesterday. In fact, throughout yesterday, we continue to see how sellers found that area difficult to break. And during the Asian session as well, we saw how everyone in the market sees the gold commodity cheap enough to buy around this point. And in the last 45 minutes or so, buy pressure still persists above the structure. So I maintain a bullish bias on this one, and I will be giving us updates of what levels to add more positions to as we continue to monitor price action around this area. And for the go-go challengers, we are going to be navigating this from a scalper's approach in the next 30 minutes or so. So stay tuned in. I will be with you then, and let us run this together as always. So this is my simple view as regards buying the XAUUSD today. While we talk about the bullish potential, we should not neglect the sellers too as well. The market, the financial market is an uncertain environment. Hence, it is important that we always be on standby to capitalize on any potential move that could happen at any point in time. So in as much as we maintain a bullish bias here, let's take into account the possibility that sellers can also come into play. And what are the conditions that will make us what are the conditions that will make us sell, or what are the things we want to see on the chart that will make us feel comfortable joining a bearish move? Well, at this point in time, I would like to see price take out the demand zone. Of course, though we have seen price broken down that ascending trend line. It has broken the ascending trend actually, and we may likely see price retest the structure. Let me give you a visual representation of what I'm talking about. So right below that descending trend line, we can see price break down this ascending trend line. And if this continues, then this could incite a sell to the downside ahead of the weekend. And for me, if this happens, this could be a sign that market participants are taking profits off the chart before the weekend, because we don't know what could happen during the weekend. There is ongoing geopolitical tensions in the Middle East. Anything could actually happen, and most of the traders will not want to put their profit on the table, especially when the market will be closed for 2 days. So we could see some strong signals from that particular area, but where will it be reasonable for us to join a sell? So I think the psychological level at the 2,660 is looking promising for us to consider joining a bearish move. And in fact, I would like to see a breakdown retest of that structure before considering joining a bearish move. So let me just label this area. So you do want to be doing that right away. So we have the 2,660 level marked out there. So a breakdown retest. Remember, I want to see some confirmation before jumping in. We are within a demand zone, and it doesn't make any sense to sell within a demand zone, an area that has a memory for buying power. So instead, we will rather exercise patience and wait for confirmations to happen, and confirmation will definitely reflect on the chart as a retest of structure. That is signs that buyers are finding it difficult to maintain momentum above that structure. Then we can start considering joining a bearish move to the downside. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give us update as at when due. So as at this point we are right now, buying the XAUUSD is looking reasonable while we anticipate the US core PCE coming later today. So this is my simple view on this particular asset today. I hope I made myself clear, but if you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to round off on today's Forex Morning Mastery. And do not forget to give that video a thumbs up. It goes a long way in inspiring me to do more. And like I did say earlier, it also helps the YouTube algorithm to identify this video and push it to a wider audience of traders who may find the content beneficial to them too. And thank you very much as you do so. All right, all right. So, in the absence of no questions, okay, I can see a comment here. Esther Idimachi says, with the update from yesterday, I'm still expecting bullishness on XAU, especially at 2,652. Okay, 2,652. Okay, that's way down below our temporary demand zone. It's okay. Let's see how things will go out. I try as much as possible to refrain from being convinced in that sense. But one thing I would like to always do is to keep my fingers crossed and ensure that I look out for confirmations to happen using my structures and patterns to help me navigate the dynamic. And for today, this is what I'm going to be using. And for those who are scalping too as well, I think this is the best scenario for looking out for this trading opportunity, especially on a lower time frame like the 15 minutes time frame. So let's see how the market will play out. Definitely I will be giving us updates on both my TradingView and Telegram platform. I think you're also part of the Go Challenge, Esther. We shall be seeing together again to see how to navigate this together in a couple of in about 30 minutes from now. All right, thank you for your feedback there, Esther. Thank you very much. So with that being said, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate you guys. For those of you who clicked on the like button, from the bottom of my heart, thank you very much. And for those of you who are yet to do so, please do. This is the cheapest way you can actually support this community to grow. And thank you very much as you do so. So today we were able to attend to all of the assets we're monitoring for this week, and we've done fantastically well through the course of the week. The USOILSPOT has done well, though we had more momentum coming up today. So I look forward to this for today's trading activity, and I do hope we all marked out these levels and structures as we have identified on our charts today. And if you have done that, well done and kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. For those of you who are joining us for the first time, I hope you are able to gain one or two things as we discussed today. If you have done so, well, I look forward to seeing more of you same time on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well this to prepare ourselves for another week, which is going to be a merger between the last trading day of this month and the first trading day of the new month. We shall see there. And if you are yet to subscribe to the channel, I encourage you to do so right now, as I will be sharing some interesting setup in preparation for next week's trading session. And of course, we are also going to be running the Forex market prep during Sunday's on Sunday as we prepare for the new week, where you have the privilege of giving me any asset you want us to look at. We'll dissect it together and let's see how we are going to be navigating those structures from a swing trading approach. So I look forward to seeing you guys. Hello, hi, good evening. Vivek from India, namaste. Glad to have you around with us, and I look forward to seeing more of you. I think it's on this note we have to call it a day here. It has been a wonderful moment with you guys, and I look forward to seeing you in the comment section of both my TradingView and Telegram platform as we continue to monitor price action. So I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening. And I wish you a wonderful weekend as well. Bye-bye.